Welcome back, everyone. It has been a while now since I've done a three stocks on buying video, so today's video is just going to be an update on three stocks that I've bought recently. So before I start talking about the names, I just want to cover a few things. First, obvious disclosure. Obviously, I own these stocks because I'm telling you that I bought them recently. However, that does not mean I'm recommending it, or that does not mean that it's a good idea for anyone else, because these are all fit into my portfolio with my risk idea on risk reward, my balance, if you will, of how they fit into certain themes in my portfolio to not go overweight any specific um, theme that could cripple the portfolio, even if it's built through different types of positions. The other reason I'm talking about that type of portfolio construction for me is because these are all three new positions that I entered recently. That being said, there are still a number of positions that I'm slowly scaling into, either as they go down or as they prove something to me, or for as time goes on in certain cases. But anyway, so these are not the only three stocks I've bought recently. These are just three newer positions. Number one, I spoke about this last week, I believe, Trevali Mining. So this is all about zinc leverage. It is a setup, has 90 cent, maybe let's call it 95, all-in sustaining cost, and anything above that is profit in zinc. Now it's pretty cheap. They have, I think, they have three operating mines. A fourth is kind of on standby, and their market cap's about 100 million Canadian. So value for value's sake, I mean, there's a lot of potential there if the zinc price stays high enough. Now, the idea here is that I think that the market is tight enough, and I think that inventory is tight enough, and there's been enough supply disruptions that should support the price in this near-term uncertainty, particularly as autos and a whole bunch of other things start ramping up back in the economy. So um, I think that the price should stay elevated for the midterm at least, and hopefully we can recover. And I think that there's a lot of mines that have shut, some of the supply that's shut down needs really a dollar, maybe $1.05, maybe $1.10, maybe more to come back. And so that won't come back and the market will be nervous enough about supply to keep the price elevated. I also don't see much big investment near term, as many places are worried about liquidity more than expansion. So for the near term, um, where for in Trevali's case, the near term, the risk is the debt. They have been having trouble servicing the debt. However, that was because prices were low, and if the prices are supported in the near term, then Trevali should be able to pay down the debt, and then there's a tremendous amount of leverage potential for the upside there. So hopefully that works out. Now, what could go wrong here is if the price kind of stays somewhat low and inventories build and supply comes back, that's the risk. Now, if the inventory builds too much because things take much too long to start ramping up, then we may have to look at calling this one off. But as of yet, I think still I'm still liking the thesis. Obviously, it was last week that I started. Two, Methanex. So Methanex is one of the world's largest producers of methanol, and this is a highly cyclical business, and it is, well, very cyclical and there's a lot of leverage here. That being said, it is a company that has made a lot of money over time, and it's a bigger company that's more well, in normal market environments, they would be making money. They pay a dividend. They cut it recently because times are tough. But in the near term, the questions revolve again around debt. It's almost like having a massive amount of debt when you don't have to is not necessarily a great idea. But anyway, Methanex. Been some insiders buying recently at lower prices than where it is now. I didn't get anything near the bottom on this one. Was looking at other things again, but I still think that there's a significant amount of upside potential for eventually. Now, it isn't the ideal situation in that they did need prices higher than where they were last quarter in order to make money. And I prefer the making a little bit and then potential to make a whole lot more versus the slow fade until things change. That said, I think the prices have moved up a bit recently, and there has been well, we are progressing towards a recovery, hopefully. And if you look at the long term for this one, the price is pretty cheap. Last time the price was in this range, they were producing like 45% of what they're producing now on a per share basis. I mean, this is one of their talked about metrics or whatever. But I just think that there's a lot of potential here, and this is a stock that is, if you look at the long-term chart, very volatile, and I mean, that's fine with me as long as you're getting in at the right point. So the threats here, higher gas prices is a headwind, even though they are mostly hedged to the gas price. However, higher oil price is a tailwind because this is, again, energy, and they use gas to make ethanol. So, and I am a bit of my hesitation here has been I am kind of a bit bullish on gas, but they are, again, hedged, so I don't think it's going to be that big of an issue for them. Lastly, yes, uranium. I have initiated a few more positions in uranium. Now, this isn't to say that the old positions are not any good. As I said before, I keep adding to the older positions, but there were a few things that had a bit of a different profile that I added recently. Now, like I said, there were a lot. Well, a few, but anyway, the point is that when there is a company that has a high standard of management, a quality company with good value, and I want to diversify, looking at things together, it kind of forces me to have a look at them, and there were a few that I added to. Now, it is unfortunate that the restarts happened and as a bit of a one-two punch, and I say unfortunate in the most literal and exact sense of the word that I can think of. But uranium should still move eventually, and I don't think it's too long now. And anything I've said on this channel has never assumed that the shutdowns would stay indefinite or super long. It's just been what I've looked at, and obviously there was a hope, but never assumed it. Now, I can hear a few of you asking already, what about spot? Spot's been falling or whatever. And my point that I will make on that is, yeah, it's supposed to. It's not supposed to, but if you look at the seasonality of Uranium Participation Corp and the expectations for the near term up until, well, September or October, depending on how you look at the seasonality, the buying patterns it's not great. And so, yeah, there's supposed to be a retracement in the level, and because Prom, yeah, they were buying, and yeah, that's news, I suppose, but we should have known that really. And the thing about them buying was, yeah, they're, imagine you're them. you know you're going to need to buy. You never want to corner yourself and make you have to buy everything. And so if you know you're going to buy, you buy a little bit, a little bit, a little bit before you have to, and kind of even it out. And so now with everyone kind of looking like they're heading back, there's some pressure. So you can pull the bid a little bit, and you can let the market sell if it really wants to sell. And it's we'll see where we are in a few months because this market moves in slow motion. Slow motion. Anyway, a few of you are probably thinking, "Oh, you didn't tell me which uranium stocks." Well, 2 points on that. One, yeah, I did. I dropped hints through me talking. The other thing is they all mostly move together. They mostly move together, so it's a matter of how much risk you want to take, how much money you want them to spend between now and the price move. So um, it doesn't necessarily super matter too much which ones you pick. So that's just me noticing on how things have been moving. The other thing is URA rebalance. I did want to briefly mention that. That's could impact some of the larger ones. When I say larger, say 100 mil Canadian-ish, 70, well, more than 50 mil US, I think is the cutoff of free float. So we'll see. That'll be announced soon how that's calculated, but we'll have to see how that goes. So that could be a bit of indiscriminate buying for some, and maybe that'll drag up some of the smaller ones, maybe not, but either way, it's financial engineering games, and some people don't like to really concern themselves too much with that, and some people do. So it's just a near-term equity positive catalyst in the face of questionable short-termism in the spot market. Anyway, that's all for today. Thanks everyone for watching. I hope you enjoyed, and bonus points to anyone who caught all three of the hints that I dropped on the first time. Probably most people would catch zero. Don't feel bad if you did, because I hit it rather obscurely, and if you didn't know you were waiting for it, you probably missed it. Anyway, until next time, have a great day.